Hello everyone, I hope you're all having a great day. Today's video I'm going to be talking about risk entries versus confirmation entries and how you can use them, implement them into your strategy, whether you want to use both or just one. I'll show you both of them and you can kind of pick what suits your personality more and what you prefer to trade. Personally, I mainly trade risk entries. Don't be misled by the name. I know they're called risk entries, but they actually probably have the high probability of winning. Normally a lower risk reward, but yeah, they're not as risky as they sound. So as always, I'm going to talk a bit about the theory, and I'm going to get into this chart on GBP JPY with two different setups that you could have used. Both of these setups were sent to my Discord group. I totaled, I think it was about 17% from both of the trades, maybe a bit less. But yeah, it's very nice two setups. They were both sent through that you could have got in on if you're part of the Discord. So if you're not, definitely check it out. The link will be in the description. And I've also got a new Telegram group. It's very new, haven't really started posting in it. But if you'd like to join that as well, if you prefer that over Discord, then that'll be in the description as well. But let's get into it. Okay, so I'll start by drawing out a potential setup, textbook setup. So let's say you've had something like this. You've had a spring, Wyckoff accumulation, or just whatever you want to call this. So you've had your spring and it's left behind a nice demand zone down here somewhere, where you think the institutions have placed most of their buy orders, and they're going to come back to mitigate. So a risk entry would be if you want to wait for liquidity or not. It doesn't affect whether it's called what it's called. But a risk entry would just be placing your limits at this demand zone, and then targeting the high or whatever you want to target, and hoping the price comes down, maybe forms some equal lows, taps into your zone, and then takes off. So this is a risk entry. Okay, didn't draw it very well, but pretended tapped in and took off. This will be your risk entry. You're getting in with no confirmation, and this is quite good for high time frame trading. This is why I use it, because the higher time frames is what moves the markets in the bigger and longer moves. If there's something that makes you a bit cautious whether you want to enter the trade, maybe back here there's like a double bottom, and so there could be some liquidity resting below here, and you might not want to take this trade because you think that liquidity might get taken out. What you can do is wait for confirmation. And so instead of getting in on the first tap, you would wait for price to come down, do whatever it needs to do, tap in, and then go to a lower time frame or on the same time frame. I'll get into that. Wait for a reaction, some kind of breakout structure, then a pullback, and then take off. And so you'd be looking to get in from like a fresh demand zone on either a lower time frame or the same time frame. Both of them setups I'll be looking at in the live chart, and you'd be like trying to get in on this. And these trades will be low probability, but high risk reward, because as you can see, this area is smaller than this area, so your stop loss is going to be smaller. And so yeah, it does increase your risk reward. So whatever you prefer, just back test it and practice testing it on demo or on the charts, or ideally on a live account with the small lot sizes. That's something I'll talk about when I do a video on psychology. Just trading with low lot sizes is a good way to get into live trading if you're not live trading already, or if you're struggling because you're probably over leveraging and trading too high lot sizes, risking too much, but that's for another video. Okay, so I know that was kind of quick. Sorry if I do speed too fast, just let me know in the comments if you'd like me to slow down a bit. But just to summarize here, the risk entry, you're going to be buying or selling straight from the fresh demand or supply zone, which is going to give you a high win rate but a lower risk reward. And this is good for the high time frame zones. As I said, that's what I use. And it's good if you can't always be looking at the charts. You can just analyze it, even if you want, just once at the weekend, and then analyze it like once a day maybe, and just set alerts when your trades get triggered and stuff. So that's good if you want to swing trade. And then confirmation entry, you're going to wait for price to tap into your higher time frame zone, and then wait for another zone to form, either on the same time frame or lower time frame, which will increase your risk reward, but you will have a lower win rate. So this is better for if you're experienced, or if you're just able to manage your risk and you're confident in your strategy because you backtested it well, because you will most likely end up with more consecutive losses due to the lower win rate. Yeah, this is the kind of theory. side of things, so then I'll get into the charts now. Okay, so just looking at GBP JPY on the 8-hour chart, I was actually looking at it on the 4-hour chart. What you can see here is some liquidity has been built up below these two lows. Some sell side liquidity, which you're going to want to be taken before you're looking to go long. So once that was taken over here, you can see, let's change that to an X. Liquidity has been taken here before a strong push up. You've got bearish market structure, and then this supply zone here gets invalidated. So we're looking to go bullish now. Even this supply zone got invalidated up here. So you know it's broken a lot of structure from this area. A lot of buyers were placed here that push price up. Now the reason I just went to the 8-hour doesn't really make a difference, but see this candle, which you would call the order block, you know, the last bearish candle before the bullish move up. It's not engulfed by the next candle, so you can always just look up time frame, have a mess around, see which one looks best. You can see most of the orders were accumulated in this area, as there's a strong bullish candle leaving behind a lot of imbalance. So you can mark that up as your demand zone. It was actually the same as the 4-hour chart. That's 4 minute. Okay, so what you can see is after the liquidity grab, price took off from the zone and then created some liquidity and returned to the zone. So a risk entry would be buying straight from here, stop loss below, and target those highs, whatever. So that'd be a nice 4% trade eventually. And then a confirmation entry on the same time frame. You can mark up this demand zone here. And it's actually a nice wipe off the accumulation back into your zone. You got some nice liquidity created, push down, push up, spring, and then the like distribution phase or whatever. Then price pushes up, and you wait for price to come back to your zone before going up again. So this is one of the zones I sent to the group, which was a nice 4.5% trade, I think. Now it does look like a risk entry if you weren't looking backwards. You know, if you've got to do this, it looks like you're just buying straight from the zone, which is where my last video on order flow kind of comes in. They kind of work together, but it's still confirmation entry. Order flow is basically just confirmation entry. And then target, yeah, these highs. And that was nice, yeah, 4.5% trade sent to the group. So make sure to join that so you're not missing out. Then if you want to go to a lower time frame, which is another thing I did in the same kind of setup, you can look in here, see what price does, comes down, taps into your zone, takes off, and then left behind this demand zone, which actually just about got triggered on this here by about, I don't know, a few tenths of a pip, but that was nice. And that one was a high risk reward trade because you're going to a lower time frame. Obviously there was a less chance of it playing out, but I think it was about 803. And yeah, target those highs, and that played out for a nice 12%. So that was very nice 2 trades. Just to recap, you got your high time frame demand zone, gets tapped into before price shoots up again, breaking all the structure. And yeah, and then it also nicely creates some sell side liquidity, which is always a nice thing to target. Now you've got this like trend line here, so you've got some buy side liquidity, which is a nice place to target because the institution is going to look to target there. So my bias is definitely bullish. I entered down here, as I said, targeted the highs for a nice trade that played out over about 2 weeks. But that's why if you haven't seen my video on how to trade hold for longer, I definitely recommend watching that. You can just, yeah, place the trade and forget about it. That's what I did. And look for re-entries, that's always a good thing. Again, I'll talk about that in my psychology video, but just a quick tip. When you're in a trade, try and look for re-entries, even if you're not going to be taking them. It will just give you more confidence that your position is in the correct direction. And then if you really wanted to, you could also go lower time frame, you know. So you've got this 1 hour, you've got first 4 hour tapping, then a 1 hour tapping. Down here, go to say the 15 minute. have a look if there's anything. There's a nice kind of indecision candle here. A lot of kind of indecision down here before a strong push up again. And you could have gone in and buy here. I didn't. You would have eventually got stopped out if you were targeting these highs. But for me, from this setup, I'd be targeting this high up here. So that would have been a nice trade. Again, you can always go to the lower time frames. They will be lower win rate, but higher risk reward. So this was a nice 8% trade if you did take it. I didn't. It's just not part of my plan. But if you like trading lower time frames, it would have been definitely something you could have done. Or another reason why confirmation entries are good is if you do miss your first entry. If I didn't get in here, either because of spread or because I just hadn't seen this setup, you can always look for re-entries, and that will avoid you. Confirmation entries, and that will prevent you trying to just trade with FOMO, fear of missing out, because you might see it tap in here, and you might just try and enter here just randomly. But instead, look for a re-entry. If you don't get the re-entry, that's fine. Just move on to your next setup. But yeah, hopefully you now understand the difference between risk and confirmation entries, and you have an idea of what you would prefer to do, whether it's both or whether it's just one. You can make it work just doing one. It's probably easier at the start as well. If you're still quite new to SMC or forex trading in general, just stick to one, and have a look at both on the charts. Just paper trading. On TradingView, not actually placing orders. Yeah, I hope this video has been helpful and you have learned a bit. Just back here, if you want to recap, if you want to have a look at that, you can pause it. But yeah, hopefully you learned something. If you did, please leave a like and do subscribe to the channel. And check out all the links below. You've got Discord, Instagram, and Telegram. But yeah, it would really help me out. And maybe just a future setup if you've made it this far. You can look for another 4-hour entry on this demand zone here, which might be something I send through to the group. Maybe it comes back down and creates some liquidity. So yeah, join the Discord and we'll see. Also, if you've got any video ideas, please do leave a comment. I've got a few lined up. I think I've got like 4 more videos lined up, but if you've got anything you'd like me to do a video on, then just leave a comment and I'll try and get it done. But thanks for watching.